Hey everybody, welcome to this free edition of our Trader User Group Weekly Roundup. This is for the trading week ending July 12th, 2024. I'm Preston Brent. Thanks for tuning in. Well, the theme this week is value trumps growth. Now, the question is, can that last? We had a very interesting week as far as price action goes. So why don't we get into it? Let's take a look at the U.S. markets first. Everybody was in the green, but pay particular attention to the Russell. Up over 6% for the week. In fact, it made new year-to-date highs just on the performance this week. The Dow was also strong, which is composed mostly of value stocks. The Russell small and mid cap, a lot of value in there. Both of them rocketing higher. S&P and Nasdaq just up barely above zero. Nasdaq, of course, still finished green for the week, up 22.55% for the week. But all in all, a fairly strong week, okay? Now, what we've got here, the unofficial start of earnings season kicked off today, Friday. With Q2 earnings released by JP Morgan, Wells Fargo, and Citi, all three fell at open. With JP Morgan and Wells both missing estimates, and the latter, Citi, cutting its forecast going forward. So both finished down or opened down at open. Now, analysts are expecting growth in Q2 to accelerate from 5.9 in Q1 to 9.3 in Q2. So that marked the fastest rate of growth from Q1 to Q2 since 2022. So that's helping the markets. Now, if you look on the right-hand side of the screen, you'll see the forward PE ratio is 22.72, slightly lower than the trailing. And the dividend yield, 1.3, 10-year Treasury, 4.18. That's the lowest it's been in quite some time, okay? After the CPI data came out this week, headline prices fell 3% year over year. That was the first big decline since the start of the pandemic. More encouraging, though, was the core, which, you take out food and energy. That came in at 3.3% year over year. It's the slowest pace in over 3 years, but all in all, it helped the markets. And one other note I'll make about the Russell. This is only the second time since 1979, that's going way back, folks, where the Russell rose over 3% while the S&P finished in the red for that day. That's the first time that happened, really, since the onslaught of the great financial crisis in October of 2008. Now, is that a signal that things are going to really come undone? Not really sure yet. I'll show you the charts in just 1 minute. Now, if you look at the VIX, it closed out the week at 12.46, almost where we closed the prior week. So it was essentially flat for the week. And if you look at the best and worst performers, the best performer for the week was real estate, because with the CPI data coming out is a lot lower and showing inflation being more tamed and a dovish bent from Fed governors. Real estate loves that, so it took off for the week. Communication services fell for the week. Leading the way year to date is technology, and finally, real estate moved ever so slightly into the green for the week. Our year to date, 1.53%. Okay, so all in all, a fairly good week for the markets. Okay, now. One other thing, oh, by the way, with the CPI coming in when it did, most analysts believe that the current market is pricing in 2 rate cuts by December, but almost 7 cuts in 2025. That's way too aggressive. Now, if we do get to 7 cuts, remember 25 basis points each, that would be because the markets have imploded, meaning they've gotten very bad. So you got to pay particular attention to why the Feds are cutting rates. Are they cutting them because they can, meaning inflation's slowing down more, or because they have to because the markets are going to implode? We're going to see more of that as we move through this month and get the Feds the end of this month, and then we don't get another Fed meeting until September. So most analysts believe that the Feds at the end of July are going to telegraph a rate cut in September. In the way that they do it, parsing words and everything. And of course, if we come over and take a look at European markets, you see everybody was in the green. Euro stocks, FTSE, CAC 40, DAX, all in the green. Year to date, solid. The French markets, the CAC 40 is moving a little bit more into the green after getting flummoxed with Macron calling that snap election there. In the UK, we did see GDP grow a little bit, increasing 40 basis points month over month. It stalled in April. So that expansion was driven by a lot of uptick in services and construction output. And on a rolling 3-month basis, the economy grew 90 basis points. That's the fastest in the UK since 2022. So the UK, it looked pretty good. And then, of course, if we go over to Japan, you can see the Nikkei 23.23% year to date. It's actually ahead of the NASDAQ here in the US. Okay. The yield on the 10-year Japanese government bonds is around 1.05%. And that's at a 2-week low. Investors are really looking at the monetary policy coming out of the Japanese government. And again, as you guys know, I've been long the yen and suggesting everybody get long the yen all year long. The Japanese government is going to have to intervene, and they're going to drive the yen up. And once they start intervening, you're going to see more longs come into the yen. Right? We did see the industrial production growth in Japan that was revised up to 3.6%. So that's a strong revision up. So that's always a good thing in Japan. Now, if we go over to China, you can see year to date, they're the only major index we follow that's in the red year to date. But they gained on strong export data. All right. They do have some deflationary pressures hitting. We did see their CPI. It rose lower than expected, 20 basis points in June. Okay. Their core inflation, which takes out food and energy, rose 60 basis points. The PPI fell from a year ago. That's the 21st month of decline in the PPI. So that does show they're kind of in a deflationary slump. Their economy, their economic recovery rather, has been really uneven. A lot of it's due to a protracted property sector slump, which, as you guys know, they're still in year 4 now of their property sector slump. So it's slowing the entire economy down. What I'm going to do is shift the screen over. Let's go take a look at a couple of key stocks or indexes, and we'll just kind of take it from there. So I'm going to shift over. Let's go look at the E-mini S&P 500 futures first. It'll take a couple of seconds to come on the screen. And what you're going to see here is just we had an intraday high today, July the 12th, and then we sold off going into close. But you can see we're up 18.61% intraday high. Now I am forecasting a pullback going through August into the middle to late August of anywhere from down to 54.60 down to about 53.20, call it 54 to 54.50 down to 5300. Then I think we'll make another run into September, and then we'll pull back a little bit more in October, November, and then we'll have a run through the end of the year. That's the way the markets are showing it right now. The initial pullback I'm seeing down to the 50 EMA, which is sitting around 54.31. So I'm calling it 54.50 roughly is a general zone of the pullback. Okay, and you can see a little bit of divergence setting up here in that trade. And of course, if we look at the Dow actually made new highs. Like I said, it made new highs today also. You can see it moved up 6.86% intraday. Now the Dow is moving up. You remember my original target was up here around 40,956. We're coming right up to my target. I don't think we're going to get much higher than that. Then we're going to run sideways to slightly down when the markets pull back a little bit. Okay. And then of course, if we look at the Russell made new highs today. Look at this. The Russell moved from in the red on July the 5th, right after the July 4th holiday weekend, or long holiday week here in the U.S., to new highs for the year. It was like a rocket ship up. That is a huge shift in value-oriented stocks and small cap value and small cap growth, mid cap value. You could see we made a new intraday high of 6.92% on the 12th today. Okay. Really strong showing. And then, of course, if we look at NASDAQ, it trailed all the other indexes. It was up, but it trailed them a little bit. But we did not make a new intraday high today in NASDAQ. We did that yesterday, but we were up 23.41% intraday, right? I am forecasting a little bit of a pullback in Nasdaq as well. So leading up to now, we do have more earnings coming out next week. The first 2 weeks, about 60% of the companies reporting are in the financial sector. And then we're going to start getting industrials and more cyclicals and other energy and a few others. And then in the third week of earnings, we're going to get some of the big mega cap growth stocks. Those are going to be real key. And that'll lead us into the Fed the end of this month and see what they're all about. But this is kind of what I'm seeing right now in these markets. Now, one thing I will show you, if you look at the equal weight index almost made new highs for this year. So that shows you that money is now going into some of these value stocks because equal weight has trailed for quite some time. And if I show you the equal weight ratio to the SPX, you can see here that we're off the lows, and over the past 3 days, money has been coming into some more of the value stocks. Now, will this last? You can see we've had numerous up moves that really doesn't go more than 2 to 4 days, and then it rolls back over again. So through Wednesday of next week, we'll get a good idea to see if the equal weight is holding up and the value is holding up, or it's just a short-lived victory, and then we roll back over again. And then, of course, if we come in and look at the VIX and vol, it's down very low. We're just trailing down here. And as you guys know, down at this level, the risk of the bigger move in vol is always up. So I do believe we're going to break back up and move back up over 14 and 15 over the next 3 to 4 weeks as we get a little bit of a drop in the markets, get a little bit of a consolidation, and then make another run again. I mean, that to me is a higher probability move. And if we come down here and look at the bond market, remember when bonds go up, interest rates go down. And with interest rates moving down, you can see we're making higher lows, higher highs. So that's a classic case of a bond moving up, right? And I could put a trend line on this thing here. In fact, let me just put one on right now. I'll put it on like that. You could see here like that. Well, let's do it another way. Let's do this. Let me just come in here and change this to a trend line. Let's get this going here. And let's just do this. Let's put this trend line on like that. So you can see this trend line. And I believe that we're going to probably stay in this trend as we move higher, right? And that means interest rates are going to look, I think interest rates can go a little bit lower over the next 4 weeks leading up to the Feds. Okay, I think the Feds will throw some sour grapes on the rate and the aggressiveness of their rate cuts the end of this year going into next year, and that will always be a cause for the markets moving a little bit lower. I think they're getting too aggressive, the markets are, in estimating 7 rate cuts for next year and 2 this year. And then the ramification of that is they get it wrong and they have to cut from 7 to like 3 or 4 rate cuts. You'll see markets sell off just a bit. Now, of course, if we come down here and look at currencies, the dollar is down, obviously, with anything where it looks like rates are coming down, then the dollar will come down. And as you can see here, the dollar broke 2 key levels. It broke the 50 EMA right around the 4th or 5th of July, and then broke the 200. So I do believe the dollar is going to come back down, which means you want to be long the euro. And as I said with the euro, it's got to take out the 50 and the 200, which it has. And in fact, we took out these prior pivot highs. So I think the euro is going to be on a run. All right, the dollar is going to be moving lower as we go through the year, as interest rates come down, and the euro is going to be moving up. So that to me, long euro, short dollar, euro dollar kind of thing, or just going long euro future, something like that. And if we look at the yen, I'm as I told you guys all year long, you want to be long the yen. I think it's already up over the 50 EMA. It may hover here a little bit, but I think the next stop is going to be the 200 EMA. So those are the trades I like in the currency market. And then, of course, if we come down here and look at gold, I think gold is going to stay weak to go down a little bit, even though it's moved up. I think gold is going to come back down and test this level back down here again. And if I were to just let me just pencil this in just a little bit for you guys so you could see it. Somewhere in that area right there, it's going to be testing that level. And then if it breaks, we're going to come down and test this gap right here to the 50 EMA. At that point, I see that happening sometime in September. then that would be the time to come in and pick up gold. Okay. Same thing with silver. You'll see silver had a bounce up also. I think it's going to come down, test the 50 EMA, find a little bit of support in this area right here. If it breaks, it'll come down and test this area down here, and that'll be an area where you want to get long silver. Okay. And then finally, if we look at the energy market, if we look at oil, you can see oil here has moved up, but at this point, you can see the 50 EMA is over the 200. That's firm support down here, right around $80 a barrel. So for members, we'll go into how to trade this one in our weekly market watch on Sunday, but it's an easy trade, easy setup. So I don't see oil going too much higher than this, but that's a little bit of what I see here, unless we get out of hand in Israel with Hamas and Hezbollah and Iran. I don't see that happening near term. So I see an easy setup trade here for oil. And of course, if we look at nat gas, it was up today, but you could see the movement lower. Once the hurricane passed through the fields of Texas and doesn't look like a lot of damage, then nat gas right in this area here is going to start to find a bottom. So the trade here was way back over here at going short. Right here, the risk of going short is a lot higher because we're getting to this point where nat gas can move up or down, almost 50% up, 50% down. Up in this area here was the time to short nat gas. And I called that out for you guys weeks ago. But right here, I wouldn't touch it. I'd wait to see where it wants to go. Ideally, it'll come back down lower. Back over here, we were getting long all day long nat gas. That was the trade back over here because it was an easier trade. We like those types of trades. All right, everybody, that's kind of where we're sitting right now. Members, I'll see you this Sunday evening in our weekly market watch. Everybody else, see you next weekend. Have a great weekend, everybody. Ciao.